All right, back to it as we kick off another big week here. My next guest has his finger on the pulse of the American economy every day, which, by the way, the futures here look like we're in the green. Could be a positive day. We've come back from the bottom. But look, 2025 is going to be a bumpy year, I think. Terry Sawchuk, the founder of Sawchuk Wealth, joining me now. Terry, good morning. Nice to see you.
Good morning, Steve.
A lot going on. I do want to mention, by the way, you've got a big interactive webinar coming up. You can learn how Sawchuk Wealth helps people. If you think you can trade 30 minutes, would you spend 30 minutes for an extra 750 grand in your IRA? That's the question you pose here. We'll get back to this in a moment. I'll let people think about that. My answer is yes, absolutely yes. Would I trade half an hour for 750 grand in my retirement account? We'll talk about that. And in the meantime, you can look it up at sawchukwealth.com/Gruber. But let's talk about the economy for a moment here. Look, we bottomed out, was it been 10 days, 12 days ago now, Thursday and Friday of that week previous. It got ugly, down 5%, another couple of hits in the early part of last week, but then it came back. Donald Trump paused the tariffs for 90 days. We're told 130 countries are at the table negotiating, all except for one, that being China. What are you seeing, Terry?
Well, I think the market is highly sensitive to obviously the trade negotiations. And, if you look a little further down the road, I mean, obviously we're going to work through this process and I think we'll get deals with a lot of the countries that we want. China, I think, it depends on who you listen to. But I think that if they can give China a off-ramp, one that would allow Xi Jinping to have, we'll call it save face, we might be able to come up with a deal. But again, Steve, I'm not 100% sure long-term we really want to deal with China. I know it sounds like we do and we may get one, but in the long run, China's our enemy. At least that's the way it appears right now. And so if the United States can get the rest of the world to align with them against China, then maybe we don't need the deal.
Well, how important is it for, there are certain things I look at, Terry, and I agree with what you just said right there. Your sentiments are exact. Do we want to be friends with China? I don't know. There were Republican administrations that basically held their hand, walked them into the World Trade Organization, got them into the place of most favored nation status and all this nonsense. I don't know if they deserved it. They control something like 90% of the items that go into prescription medications here in America. That's not a good place for us to be, Terry. That's pretty simple, isn't it?
No, we saw that during COVID, right, Steve? The supply chain system got woefully broken through COVID, and it was very clear that we needed to re-onshore a lot of these really important manufacturing processes. And again, that doesn't happen overnight. But the Democrats under Biden had zero interest in doing any of that. They just kept telling Americans, you need cheap goods, right? You need cheap TVs and cheap clothing and all this other stuff. And in reality, what we really need is economic sovereignty. We need strength. We need a strong military. We need a strong economy. We need jobs back in the U.S. And it's not going to happen overnight, but we're going to have to take a little pain in the short term. Now, I know Scott Bessent and Lutnick and Trump are doing everything they can to make this transition as smooth as possible, but it's not going to be an easy one. And I think, like you said, this year is going to be a little bit tough on the stock market. Big
year of surprises, that's for sure. I wouldn't be surprised. We saw another couple of days where you lost 2,000 points or gained 2,000 points. The whiplash, the whipsaw can continue. But you make some important points. Let's look at energy prices. The cost of a barrel of oil has been between basically $60 and $65 for a couple of weeks now. As a result, gas prices down again today. Down 45 cents from where we were just a year ago. And that impacts everything. The cost of groceries, the cost of things that Amazon drops on your doorstep. Energy prices hit everything, don't they?
Yeah, no, it's the input. Virtually almost everything that you touch has some kind of oil component to it. So there's no question that, that coming down is going to be helpful. It really boils down, Steve, to, what happens at the 10-year Treasury. It got up to 4.51%. It's dipped a little bit with the pause in the tariffs and some of the negotiations going on. I think that's really the telltale sign. I think inflation, there's a lot of speculation about whether tariffs are inflationary. I would argue that if you get past the very immediate term, they actually might have more of a deflationary impact. So I don't agree. I think the Fed is doing some political posturing right now. I don't think they really like to support Trump. It's very clear Powell was a political actor. It was clear based on the Project Veritas stuff that they tried to undermine Trump's agenda in 2016 to 20. They actively worked to undermine his election process. So I don't think Powell's going to do him any favors. But I don't agree with the Fed's statement recently that they just assume tariffs are going to be inflationary. I don't think you can make that assumption.
I don't think you can make that assumption either. Look, there's one thing that I know creates inflation, and that's government printing of money and spending of money. That's what creates inflation. I mean, I can go back and find the Milton Friedman videos one after another online and tell you exactly that's what Uncle Milty said. It's all from one place, reckless government behavior, and I believe that to be true. As we look down the road, again, there is no clear path here. If we get, but let me ask you this: if you got 130 countries, let's just say for the sake of argument, Korea, Japan, Taiwan, on down the list to little tiny countries like Costa Rica that was on the list where I visited here a week ago, and you get deals with all these folks, right? And you're down to 10% or whatever it is, and that's just your baseline. It's 10% going either way, maybe. And China's the only one outstanding. I think that we're in much better shape than we ever were before, wouldn't we be?
I think you're right, Steve. I think the problem that the market is having right now is twofold. One is that it just doesn't know what the future looks like, so you can't make any projections if you don't have reasonable assumptions to make about the calculations. And then obviously with China, I mean, that's going to be an issue, but I think the bigger issue is how the bond market perceives all this. The bond market started pushing rates higher, and I know there's some concerns among Wall Street people that eventually what's going to end up happening is we're going to get into a situation where the Fed's going to have to buy all our debt. I'm not convinced that's the foregone conclusion. I think there's a lot of people that have a political bias that think that, maybe because that's just what they deeply want to have happen because they don't like Trump. But in the end, you can say what you want about the United States and our spending, but we're in a much better economic position than almost any other country in the world. And who wants to do business with China, who's, basically, not only are they communist, but they steal stuff all the time.
They're
they don't
thieves.
have great trade laws.
No,
Right.
no question.
So
They're absolutely, they come steal from us every single day. All right, so here's the question that I posed at the top. I'm going to ask you again. Would you trade 30 minutes for an extra $750,000 in your IRA? You can join my friend Terry here for a live interactive webinar to learn how Sawchuk Wealth helps people reduce their investment costs by as much as 50% and better manage investment risks as tariffs and trade wars threaten the markets. Terry will answer your questions, discuss simple changes that, like I said, could put an extra $750,000 into your IRA by the time you retire. You can learn more at sawchukwealth.com/Gruber. You can register for the webinar. It's happening this Thursday, by the way. And Terry, we've got 30 seconds. Tell me what this webinar is all about.
Well, it's just about common sense investing, Steve. The idea of cutting your costs significantly and managing risk appropriately. The reality is, over the last couple of years, risk management really hasn't been that important. But as we learned in the last couple of weeks, I mean, at one point, Steve, at the low point, all of 2024 gains had been given back. Now, we got a little bit of that back, but we're not done yet. You need to manage risk. This is really important.
I want you to go find out more. If you think 30 minutes of your time is worth $750 grand in your IRA, which I think it is, by the way, sawchukwealth.com. It's right there. You can shoot that QR code on your TV screen. Sawchukwealth.com/Gruber. Register for the webinar. It's this Thursday. Terry Sawchuk, thank you.